Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, February 16, 2023. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, actually there's a lot of stuff going on. The daily chart is actually saying a lot of stuff. The market activity, the price action, the closing prints today, the way the market reacted and acted into the close is all activity that's information that we can derive part of our analysis from. Let's start here. Above all the moving averages, the trend is your friend. There's nothing wrong with the tape. That's a good starting point. They had some unfinished business, which you'll see later inside the numbers. They missed it by pennies this morning, and then they came back to make another attempt before the closing bell. Check this out. Let me show you what this is, where it comes from. Not all unfinished business, as I like to call it, is the same. This one happens to be a gap. So here the closing price is 408.04 on the 10th of February. The low the next day is 408.24. The low the next day, 408.51. They never filled that gap. Now watch this. Here's a 10-minute chart from today. Right of the vertical is what? Repeat after me. Today's activity. The low in the morning, right out of the chute, we were waiting there with both hands open to buy the market. Inside the numbers live room, we were waiting to buy the market. If you front run the market, you got paid. The low here was 408.26. They came back for a retest, but a higher low took off. Into the end of the day, they stopped short. Watch this. The low in the afternoon, right into the closing bell, is 408.14. And here's where they are right after 4 o'clock. Funny how that works. That's the thieves in the afternoon, the thieves in the morning, the thieves during options expiration week where weird stuff happens. They didn't want traders to buy 408. That's basically one side of what happened today. It was the buyer prevention team, BPT. Now, what does that mean going into tomorrow? Is that bullish, bearish? Well, it's neither. We're just reporting what happened in terms of the gap. They just wouldn't let you have it during the trading day. But as long as they're above the moving averages, the trend is your friend. But wait, there's more. We got more stuff. So we kept talking about this breakdown candle from the 9th. And they ran a test and they could not get above on a sustained basis. So what's happening right now is they actually got rejected, not being able to close above the number, which was, and we remember this, 414.57, and here they come in the other direction. So either they close above and there's energy that'll be released in the upside, or they get rejected and the same energy is released in the downside. That's one design of a possible schematic. However, how much lower are they going to go? Well, it depends on whether or not this trend or trend channel is broken. The market's been going back and forth in this channel. We can call it a bullish, flaggish kind of formation, anything you want to call it. It will change when they break down below the low of that channel. Okay. Fair enough. What happens if you break down below the low? It starts opening the door for the downsloping trend line that we know all too well from the weekly chart. Speaking of which, the weekly chart, are they doing anything dramatic this week? They went up a little bit. They're at the lows of the week, but we don't know where the week is going to close. All in all, until proven otherwise, they're just eating time off the clock. It's a matter of perspective. If you're looking at a weekly chart playing the long game, then you didn't even see what happened today. You didn't see him try to break out. You didn't see him fill the gap and collapse all the way back down to do the unfinished business. You saw none of that. All this looks like to you is eating time off the clock. Even on the daily chart, it certainly doesn't look like this type of rodeo. We have a low, a high, we retest the high, collapse back down. That's an intraday rodeo operation. You don't see that on the daily chart. The daily chart looks like it went up, finished on the lows, above all the moving averages, nothing wrong with the tape. That's what the daily chart looks like to the naked eye. You know how we always say things morph from a short term chart into the longer term charts? We talk about change in characteristics of the market, and it starts from the short term and it morphs from there. We had a good discussion on volume today in the live trading room. How do you read the tape intraday and use volume to your advantage? What are we looking for? What kind of change in character, not only in price, not only in pattern, but what about volume? What kind of change in character do we see in real time? Those are the type of discussions that we build on. We compound the learning going forward. So we look at a 240 chart and we say, hey, wait a minute. They just broke down below the 20 period moving average once again, that they've kept riding. They kept recapturing it. They kept testing it. They're riding it. Now we'll see. Tomorrow is a make it or break it on the 240 chart, 20 period moving average. They're either going to fight back up or they're going to start in with this type of low here and the 50 period moving average. What about the 120 chart? You see how this one is morphing? They're above it. They try and test it. They spike it. They can't really sustain price below the convergence of these moving averages up until when? The last two candles of today, and the last one is only a half an hour. A change in what's been going on in the market. Is today a sign or signal of a trend change? Not so much. It's information. It could be the start of something, but it's not part and parcel with all the components that we're looking for. It was a day that was a down day that finished near the lows, but I wouldn't classify it as a reversal. But some of the shorter term charts may be indicating otherwise. How about a 90-minute chart? We never look at this one. What's going on here? Again, convergence of moving averages, holding price, holding price, holding price. All of a sudden, not so much. 60-minute chart, same routine. Keep holding the moving averages, pop back up. All of a sudden, today, instead of finishing near the highs, we finished near the lows, below all the moving averages. A complete flip around from the last couple of days. We're not reading into it just yet. We're taking in the information. We're putting the pieces of the puzzle on the table and constructing the storyline. Things start from shorter time frames and they morph up from there. What's going on over in Camp IWM? Well, a couple of things. They're contradictory to each other on the chart. Above the 20 period moving average, the trend is your friend until your shit goes out the window. But we have a big breakdown candle, can't get above the high. They've tested it. And this one is a bearish, wedgish kind of thing that will result in an ensuing move in the lower direction if they can't close above the high above 195. We've talked about 195 before. They're riding the 20 period moving average. The trend here is likely the dominant thing until it's not. They start breaking below that trend line, then we're going to play out to the downside, and then 187.85 or lower is on the table. Put that on a sticky note. IWM 187.85. Q people, same routine. It's all the same market. Finished on the lows. It's a bad day in terms of market days, but when you look at the big picture, still nothing wrong with the tape. Could just be a down day, a little bit of inserted shenanigans across the markets. Nothing wrong with that. It's garden variety of trick, trap, fool, and frustrate crew behavior. Just awarenesses at this point. What about the folks down at the transportation department? We have the same routine about not being able to get above a breakdown candle high, and if they're not going to be able to get above, then price will get rejected down in the lower direction, and guess what? We have a 20 period moving average, and these lows here, that's your short-term line in the sand for the transport people. Start getting below there, and there's probably another 500 to 700 points on the downside waiting in the wings. The financials teetering on their 20 period moving average. Is it rolling over, or are they riding the 20 period moving average? We'll get concerned if they start re-giving up on the downside, the 100 period moving average start trading lower. That will be a tell that they've once again been rejected trying to bust above the 100 period moving average. But all things considered, and you will look at this from an objective perspective, look at it from the long term or the weekly chart, what are they doing? Same routine we talked about before. They're eating time off the clock above the 100 period moving average. Today doesn't even come up in the rounding on this chart. What about smash mouth? Again, eating time off the clock above all the moving averages. They can certainly just be going back and forth, lower portion of a channel, upper portion of a channel, back and forth, back and forth. They've done this before. They're doing it again until they break below the lower portion or above the upper portion. That's all they're doing. Riding the 20 period moving average or above the 20 period moving average, trading in a channel, eating time off the clock until such time as the bottom portion of this channel breaks, breakout area, get below the breakout area. Where is that? Right here. Market runs up, comes back down, breaks out, comes back down to retest it, give that up on the downside, and a whole new situation starts unfolding. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.